Now I will make Virti as a host so that she can take up. Before we do that, uh, let me give a very brief introduction of Virti. She is also another young chartered accountant, and she has been she has completed a diploma in international taxation, which is conducted by Institute of Chartered Accountants, and she has been actively practicing in international taxation. So the point is that now day by day, the return filing for Indians has become little easier, or so-called, at least so far as government thinks that it has become easier. Ready-made information is getting available, and people think that they can directly file the returns on their own without the help of chartered accountants. So in time to come, maybe the local return filing will lose its importance from the chartered accountant's perspective. However, the international taxation will always be a matter of discussion for all of us. Reason being that it cannot be standardized, the information cannot be made available, then there are lots of interpretational issues. Now, if we just talk about the international taxation, weeks and weeks will not also be sufficient, because there are lots of issues on DTAs, then taxability, income tax act, and of course the case laws related to that. So today we aren't going to discuss too much on the international taxation as such. However, related to 15CB, to the extent whatever is important, relevant, because 15CB also is going to become a very regular feature after international taxation, the international transactions have increased a lot. So even a newcomer chartered accountant will also be asked to sign. So at least he should know what are the risks that they are taking, what are the possible litigations, because many times we have seen that chartered accountants give this 15CB certificate without actually understanding the risk implication, or even without understanding what is the actually tax impact, and they sometimes miss out on some of the important aspects to be considered before the certification is given. So this is an endeavor that we conduct such kind of lectures, and we have got only 1 hour. So and we are not rushing through. So in case we aren't able to complete anything before 11 p.m. today, then we will have a part 2 of this, and the day and date will be declared in the group. So I have also requested Virti that she should not be actually rushing through the whatever discussion. Here we are actually stopping, discussing, and there are many seniors and experienced persons. They would like to actually add value to the discussions, and that is how this group has become very useful to the people. Although we have only about 50 members attending this, one must remember that those 50 members have come here in the night, so there are so much interest. Otherwise nobody will actually sit at such a late in the night to do some kind of studies. So we are more focusing on the quality of the people who are attending, and we have been successful so far. And therefore, without wasting too much of time, I will ask Virti to start sharing her screen, because I have already made her host, so she can directly do that. Virti, if you want to give a little more introduction about yourself, you can always do that before you start with your presentation. Thanks a lot.
Thank you so much, sir, for that introduction to the topic as well as to myself. Actually, sir, I will firstly start with a small technical glitch that I'm facing. I would like to share my screen and my video, but I'm facing some problem right now. So can I just leave and join again? I think that should solve the problem.
Yeah, you can do that.
Yeah. Just 1 moment. I will join again. Hello.
You have joined?
Yes, I've joined again.
Okay, so
Yes. I think.
let me make you host now.
Yeah. Yeah. Okay.
In the meantime, you can start discussion.
Yes.
I'm just
Yes.
searching your name.
Okay. So, like Sagar sir already mentioned, I have done my diploma in international tax. I'm a member since 2016, and I'm practicing in direct taxation mainly. But 15 CB has actually become a part of everyone's practice, whether or not international tax is actively practiced in that firm. What I am going to do is I will share my screen because I'm still not able to share my video. I'll share my screen. The material that was already shared, I'll just share that.
I have made you host. Just try to share the screen now.
Yes. Is my screen visible to all?
Yes, yes, yes. You
Okay.
good.
Okay. So basically what I've tried to do is I've tried to give a summarized view of all the sections and provisions which are, in my view, become relevant towards 15 CB certification. Here is a small index that I've prepared. So this will be the flow basically that we'll follow for the discussion. And I will pause wherever I feel like, there needs some, there is a need for some debate or something, so that it becomes more of an interactive discussion rather than just a monologue. Because I think all of the members present here are learned and can share a lot of experience, and all that experience will be more helpful rather than just plain reading of the provisions. The very first thing that enables the certification in Forms 15 CB is the Section 195. So Section 195 in a plain reading, it looks very simple, and it seems like, okay, everything is probably covered, or maybe probably only a few things are covered. But on analyzing it, uh, we realize that what is covered is any person who's responsible for paying to a non-resident or a foreign company. So when we say responsible for paying to a non-resident or a foreign company, by that they mean to cover foreign companies which are residents. So a resident to a resident foreign company, payments are covered under this section. Then secondly, so the foreign company becomes a resident by virtue of place of effective management being in India, that is FOEM. And then So actually, even resident to a non-resident foreign company, of course, the payments will get covered. A non-resident to a resident foreign company, as well as a non-resident to a non-resident foreign company. So this section, since it says any person responsible for paying to a non-resident, even a non-resident making payments to a non-resident gets covered under this act, provided the sum is chargeable to tax. So in the second para, any interest or any other sum chargeable to tax other than salaries at the time of credit or payment, whichever is earlier, and at the rates in force. So I've broken up the section in these parts. Now to analyze this further, when we say that payments between a non-resident and a resident foreign company, whether we need to see, once the company becomes a resident, whether we need to see the provisions of TDS under Section 194 and all the other domestic TDS sections uh, get become applicable, or whether we apply Section 195. So any views?
Sorry, can you repeat that question? I couldn't
Yeah.
understand what.
So So my question is that when the section says and covers payments made by a resident to a resident foreign company. So when payments are made by resident to a resident, whether other sections of TDS under this chapter will apply or whether 195 will apply.
So you are saying a non-resident to resident, right?
No, I am saying that in a scenario where a resident is making a payment to a foreign company which is resident because of its place of effective management being in India.
I think Indian rates would be applicable, not 195.
Okay.
Since he's being a resident, the place of residence will come into play.
Yeah, actually, see, what we'll have to see is whether there is a non-obstante clause in section 195 that will have to be looked into, because see, under the Income Tax Act or under any legislation for that matter, if the chronology of applicability is according to the fact that the earlier section applies first, not the later section, unless there is a clause which says that notwithstanding anything contained in the act. So if that non-obstante clause is not there in 195, then all the other TDS sections are before 195. So since that entity is deemed to be a resident because of POEM, that is place of effective management, therefore, since once it is defined as a resident entity, all the provisions will apply. Although one will also have to see whether that POEM applies generally and makes it a resident, or it is only for particular sections. Because if it is a deeming provision, then it will only apply to the section for which it has been designed. So these three things we'll have to see actually. If Sagar, if you have the act, if you can open 195, that non-obstante will get solved right away.
Yes, sir. So I have the act in front of me, and like we said, ideally it's not a non-obstantive clause, section 195. It does not begin. I will read it out.
Yeah.
It reads as any person responsible for paying to a non-resident, not being a company or to a foreign company, any interest or any other sum chargeable under the provisions of this act shall, at the time of credit of such income to the account of the payee, or at the time of payment thereof in cash or by the issue of a check or draft or any other mode, whichever is earlier, deduct income tax thereon at the rates enforced.
Okay, so it's not there.
Right.
You know, and how, why, what I'm saying is borne out. I mean, another submission which I have to make, because I stand open to correction. That if you look at the ruling of the Supreme Court, where 206A, you know, that higher rate of deduction for non-statement of PAN was done.
Right.
Even in cases covered under 195, they said if that non-resident does not have a PAN, then you will have to charge at 20%, even if the DTA or any other provision provides for a lower percentage. So it was after that that the CBDT brought in those rules whereby if those 5 things are given, then the higher rate of tax does not apply. You know, like the tax identification number in the foreign country, the address, and all that you will be covering later. But what I am saying is, there also, despite 195, 206A was applied by the court.
Okay. Sir, I would just like to submit this. So, based on the reading that I've done, I have come across this notification number 29 of 2018 under section 115JH, which has specified and clarified that for such foreign companies specifically, where they become residents due to point being in India, the provisions of section 195 will apply and not section 194 or other. So I was just trying to see because even my
Okay,
view
what is the
was that
notification number? What is the
notification number 29 of 2018.
Okay.
And so then the question that I was, I was wondering of is this talks about, payments which are received by such companies. What about payments to be made by these companies? Just like all the other companies, whether they will also be subject to TDS under all the other regular sections. And this notification also clarifies that they are not required to, they are only required to deduct tax as per section 195. So under 195, then salaries don't get covered. So ideally, such companies paying salaries in India would fall out of provisions of tax deduction. So this notification is a big notification which specifies how the income will be calculated and for which year and what will happen to the income of the subsequent year. All of it is there, and I also have it. I can share it, but I am facing some difficulty in swapping the. I can provide all the material that I will be referring to together, all the notifications and the circulars that I'll be referring to today. Is that fine? Does that work?
Yeah.
Okay, you can probably send it to Sagar.
Yes. Okay. So I will compile everything and I will send it to him today itself. Okay. So now, so basically, Form 15 CV is actually coming into force with because of Section 195(6). And 195(6) earlier, as in before amendment, it was amended in 2015. Before amendment, it only covered those payments which were not chargeable to tax. Sorry, those payments which were chargeable to tax. So payments which were not chargeable to tax were left unnoticed. So just to bring all of that into the database of the government and what remittances, whether or not they are taxable, these words were added, and subclause 6 was changed suitably. And Rule 37 was not modified by this act in 2015. So 37 remained as per the old provisions for some time. And then later on, they realized that, okay, this mismatch was there. So then they also modified 37 so 37 basically specifies which part of the forms 15 CA and whether 15 CV will be applicable or not. So I've just made a flow chart to make it more understandable, because the provisions, if you just read them at once, it's a little confusing. So ideally, they've categorized it into two sections. One is if your payments are covered under the LRS scheme, which is the FEMA Schedule 3 current account rules, and so payments made by individuals. So if they are covered under that, or the rule 37 BB provides a list of 33 payments, 33 different payments that are specifically exempted from this reporting requirement of 15 CA or CV. So if your payments are covered under this, then you're not required to present either 15 CA or 15 CV. Now, so that covers the first section, and then the second is whether the
I
amount.
just one small question, not a question, but an
Sure.
observation, if you can permit
Sure.
me. See,
Sure.
what has often been noticed is banks, although these items are covered under no reporting under 37 BB, they ask the client for providing the 15 CB and CA, without which they are not ready to process transactions, especially if they are large volume transactions. So any experience of similar nature received by anyone else? Because I had to argue a lot with that bank manager, explaining to him that what is not required under the act, I can't provide you. So it was a big issue actually. So anyone has experienced something like that, where banks keep on insisting, even if they are covered under exemption and you show the
Yes, yes.
exemption notification.
So this has been a trend so far, that banks don't want to take any risk and they want to put it on the CAs. So that's something which will have to take it with a pinch of a salt, and we'll have to look out for our clients and we'll have to provide the certificate.
I understand. No, I just wanted to know if anyone else has experienced that. That banks
Yeah, sir.
asking for certificates
Almost
which are
on a
really not
regular basis,
applicable.
banks are insisting for 15 CB as well, even if those transactions are covered by exemption.
Yes, yes.
Yes, sir. Same with us. They think that 15 CB is required for all types of payments, and they don't do without it.
Sagar sir, we can probably take it up somewhere, or
Yeah.
we can tell Chitray sir or somebody.
Yeah, we can do that. But rather than litigating, it may be good idea to give the 15 CB.
No. So we give the certificate ultimately, but it is a matter of concern. Then why provide the exemption? No? And of course, there's a contrarian view that for every certificate you can charge something. So, but we are not really sitting for that. And that's what I think, at least.
Correct.
Not at this stage of our practice.
Correct. Absolutely. We are not sitting for that, but we also do not want to waste our time also, because in that case, we try to convince the banker, sometimes go and visit the bankers also and tell them that certificate is not required, and we do not get anything out of that. So better, if it is certainly under those 33 items, even you can mention that reason itself in the 15 CB and close the matter. Because many times these banks which are remitting, now there are different banks. Some new people are coming in and they are not aware, and then it is not our duty to actually educate them on this. And therefore, sometimes at some point of time we have to give up and look at our time effectiveness of our utilization of our time. So that's my opinion.
Very true, because another pain point with the bank is the purpose of remittance. Those provided in this section, I mean, in the 15 CB form, and those which are there in the RBI guidelines, there is a variation that has changed, and this has remained unchanged. So that is another major.
Really, that is another pain area. That is something we should take up actually.
Because at least RBI, whatever is the purpose of remittance as per RBI, that should be there in 15 CB, not something else completely.
Right. And with the insertion of this new section for penalty, wherein, even the chartered accountants have come under the purview of this penalty for inaccurate furnishing of certificates, we can very well take this issue up, saying that, because if the purpose code does not match, it becomes inaccurate furnishing in a way.
Yes, you can. Yeah, that's right. So I think Virti, you can continue.
Yeah. Okay.
Yeah.
So the next portion is the payments wherein if the total amount of that payment exceeds 5 lakhs. If it exceeds 5 lakhs, we need to check whether a certificate for lower deduction or nil deduction has been obtained. And if it has been obtained, then only part B has to be filled, and Form 15C has to be filled. Whereas if such a lower deduction order or the certification has not been received, then we need to. So ideally, there is only one case wherein 15 CB is required, if we see from this chart. And currently, we are issuing 15 CB for all categories of payments instead of just one. Now, where the amount is less than 5 lakhs, it is evident that only part A has to be filled. But how to determine that whether this less than 5 lakhs was already known to the payer at the time of making the payment, or what if subsequently it exceeds and earlier it did not? So that is still a practical issue that we face, that whether part A can be given ideally. Any views that I don't practically so.
Again, here, if it is not exceeding 5 lakhs and part A is filled, that is not a CS responsibility as such. So whenever, even in cases where we are preparing, it's ideally signed by the director of the company, and it is not a CA's. There's no certification as such on those transactions. So
right. No, I'm just speaking from the payer's point of view as well. Wherein they're required to fill form, part A, and suppose the amount exceeds 5 lakhs, and then they fall under since they don't have a lower TDS certificate or order, they require a 15 CB, whereas they have filed they filed it for 15 CB with part A. So there.
So you mean because of exchange difference or some other thing, the same transaction exceeds 5 lakhs, or
No,
there's
no.
another
The
transaction which
total,
happens, which together makes it
right.
exceeding 5 lakhs.
Correct. That is what I'm speaking of. Suppose I made a payment of say 3 lakhs and I was not expecting to make any for future payments in that year, but I had to for whatever
No,
reasons.
actually earlier there used to be a certificate required to be given. So what we used to do is we used to obtain the bank statements of the client where the payments are remitted and keep that as a proof in our working papers and say that on the basis of payments made till date and what is the expectation of the client communicated to us, it does not exceed 5 lakhs. But later on, if it does, then that's not our responsibility because we cannot kind of project or foresee into the future. So we cut off till date of the transaction. We have to verify if there are any other payments that we have to do, especially for freight. Now, freight operators, this is required for booking of freight. This is needed, especially where you're importing or exporting goods using overseas shipping companies, non-Indian shipping companies.
Right. Okay. Shall I move on?
Yeah.
Yeah, go ahead.
Okay. So another point to factor in is that these authorized dealers are required to report all of these remittances. So whichever category we fall under, or even if there is no reporting at all, there is no 15 CCV required and it hasn't been done. Even then, authorized dealers are required to report all of these remittances quarterly. Now, because of this, there can be mismatch in the data that is available with the revenue. On the basis of this, there can be unnecessary harassment that can happen in the future because all of this they are collecting information band-wise from the authorized dealers, and I don't see how matching of this information can happen even in the future. So yeah, so this is one thing which has not been modified. Form 15CC for authorized dealers has not been modified. Now rates of tax. So for rates of tax, there are multiple debates and a lot of judgments for each and every portion of the reading for rates of tax. Now rates of tax ideally is defined under section 237A 3, wherein it says that more beneficial of the two, which is the treaty rates and all the rates in first schedule of the Finance Act, will be considered as the rate. Now, to claim the treaty benefits, we should be able to prove that we, hello, sorry.
Yeah, you are audible.
Am I still connected? Yeah, okay.
Yeah.
So to claim the treaty benefits, it is essential to firstly provide the TRC. TRC was mandatory even under 206 AA till a time, and it is still mandatory as per section 90 and 90A. Now, this 90 and 90A have not been modified, whereas 206 AA they have subsequently modified for few payments, which covers major payments category, that is interest, royalty, FTS, all of this, and capital gains. All of this 206 AA has said that even if you don't have the TRC, as in if the country wherein your resident does not have in its law to provide a TRC and you don't provide a TRC, it is okay if you provide alternate information, which is email and contact number, address, and all of that. So, and coupled with tax identification number. But the same, same amendment is not made in section 90. So we ideally still require TRC, and if all the information that they need, that the Act needs, the government needs is not there in the TRC, then 10F also has to be filed, Form 10F, which is ideally just all the information that would be in a TRC, what is the status, tax residential status, the year, and the tax identification number and the contact details and all of that. So now in in the case of TRC, if you don't have a TRC, you do not get the benefits of the treaty. Now, there are a lot of issues. The first one being that what if the period of TRC is different, since that country follows a calendar year and we follow a financial year. So, can we rely on such a TRC? Any views?
See, if that calendar year falls in the current particular financial year for which you are issuing the certificate, then we have been accepting it or advising the client to accept it. So at least it should be, like suppose it is a calendar year, then you do not worry yourself if it is ending in December, whereas our financial year will end in March. Because only in the next, the next TRC would be applied in January or February, and I don't know what would be the processing time. You just take an email from that person saying that, yes, the TRC is valid up to a certain date and it has been applied for. That should be good enough. So prima facie, there won't be an issue. But if it ends in an earlier financial year and you want to use it for the subsequent year, we have advised the client not to do. I'll give you a specific example. See, now 1st April 22, the new year has started, the new current financial year. So if your TRC ends in December 21, rather, so before March 20, so up to March 22, you could probably use it, but definitely not for transaction, deduction from 1st April 22. You need the newer one. I don't know, but even there 3 months get uncovered. So I don't have a solution for it. So we just advise them, you take an email from them. That's all.
Regarding one more observation is regarding when we are taking the form 10F. If you read the last line, it says that I already obtained a TRC from our department. Can we rely on that 10F where he is giving the declaration? And second is, in US, unless and until you filed your first income tax return, they will not issue the TRC. So in that case, what should be done? Has anybody come across with this type of observations?
Sir, in this case, the TRC, though it is stated in section 90, but as per when we take the treaty benefit, there is nothing in the treaty to suggest that TRC is mandatory. What we need to justify is only the residential, that the person is resident of a contracting state. So there are a couple of tribunal rulings as well, which has held that so far you are able to demonstrate that the person is a resident of the particular contracting state. That is good enough. So at the assessment stage, there could be a problem, but at the appellate tribunal or at the appellate authorities, you may get a relief as well.
But that is what should be done at the time of signing of 15 CB.
So at the time of 15 CB, you may grant them the treaty benefits, provided you are having sufficient documentation that that person is a treaty resident of that particular jurisdiction.
Correct. Sometimes it happens also.
Yeah, I've come across one case, I remember now, where the client, the foreign entity has obtained from a chamber of commerce, a letter to that effect. I don't remember the country now, but chamber of commerce there had given, something equivalent to chamber of commerce. They have some trade commissioner or something like that position. So it's on the government stationery, but not the revenue department. States that yes, they are resident and that they would be. That's it. That they are residents. I remember that. So maybe that could help, some kind of a certification from any other entity, or maybe if it is registered as a company abroad, then from their department, equivalent to the Department of Company Affairs, if there is some document which says that it is a registered entity there.
Correct. We also seen that when the certificate is company is getting incorporated, They are sending the either registration certificate, they are sending either VAT registration certificate, or sometimes in case of individual, they are giving the social security card certificate.
Yes, that is basically it's some kind of an identification that the entity is working there or is legally located in that country, entity or individual. Maybe if a clarification or a circular comes on this, it will be make life easier for all of us.
See, I would
Well,
actually, yeah, I would like to add to this that let's say let's say we are talking about the Indian tax residency, which is also required to be given. Can an Indian government give a tax residency on 1st of April 22, stating that they are tax resident for the period from 1st April 22 to 31st March 23? In my opinion, the tax residency should be always be for a past period, because today I am a resident. Let's say after 2 months I am not resident. So on 1st of April, if somebody is giving the certificate, how can that be considered as valid for the period up to March 23? So that itself looks to be little difficult, and therefore some countries have seen that they give the certification only after that year is over. Some countries are giving in advance and covering the period up to the future period also. So I fail to understand how somebody can talk about the future tax residency when it is always possible. Of course, there are certain criteria which will always remain permanent, kind of a thing like registration or incorporation in that company, but there could be some other criteria because of which the entity might become a resident of some other country in future. So
Very true, especially for individuals, it is very likely.
Hmm.
Individuals or some entities.
So in that case, I mean, the logically, if we are giving the tax residency certificate for the past year, then that should be considered only for the purpose of tax treaty, because from there only we'll come to know which country's tax treaty is becoming applicable. Supposing if somebody is a tax resident of one country and subsequently they are becoming the tax resident of another country, for that purpose we should ask them or some kind of documentation where whenever there is a change in the tax residency, that party is required to intimate to us before making the further payments to them. And if that kind of a commitment is taken, then probably we might be out of that kind of a responsibility. That's my personal opinion. And then subsequently, for example, if we are continuously giving the certificates to a party year after year, then we are already given the certificate for a year. That year tax residence certificate was, let's say, not available because of this reason, but subsequently that government has given for that period, that should also suffice. If that is at the time of giving 15 CB, it was not there for that year, but subsequent period it was there. Ultimately, the purpose of that is to recognize the country for which the tax DTA is to be applied, and that purpose is getting solved because of this. So,
but Sagar, what would happen if on the basis of a future certification, which is expected, you give a 15 CB and then later that does not materialize? That will cause a bigger issue. So,
yes.
I mean, it is good that many countries are giving this certificate in a prospective manner. So at least we are able to issue 15 CB. Otherwise, it would become a very tough time. How can you issue 15 CB when that is not there? Then you have to only advise the client to apply to the assessing officer.
Correct.
Then there is no other choice in such case. Because see, if that certificate is going to come at the end of the year, and what if it doesn't come, or if that person fails to obtain it also? Because company has already received the money, the remitter has already remitted it. So what if they don't apply at all? That can cause a very tricky situation.
Correct. And then you're having only for the last year, and subsequently that party has no connection. Once payment is made, then that becomes a real problem. If it is a continuous process, then that party will definitely try to obtain for the subsequent transactions. But if there is a one-time transaction, this problem will always be there.
So then what should be the consensus? That you should issue it only if there is a certificate in hand.
So, if I may interrupt, can we rely on the various tribunal judgments which say that if you have sufficient other documentary evidence, which makes us believe that yes, it is going to be. Suppose, for example, if I have it for the previous calendar year, and we assume that it's a going, since the company is still conducting business and it's in the same location, and they provide other documentary evidences, and relying on that, we subscribe to the treaty. Because the tribunals have ruled in favor of the SSA in such cases. So can that stand be taken, unanimously?
Yes, probably, and it can be supported by an affidavit, because what I advise my clients is that obtain an affidavit from that other entity, which is executed before a notary public. They call it something else abroad. So get an affidavit which states that yes, they believe or they understand that they are residents, and
Right.
that
A
they would be
postal.
obtaining and filing for this, and also that they do not have a PE in India. That is the third point which we add. So that they also don't have a PE here.
Right. Okay. So I think that summarizes the TRC criteria. Now, TRC is a prerequisite to claim the treaty benefit. Now, 206AA is another section which says that there is a need to furnish PAN by the non-resident pay. And if the PAN is not furnished, then higher of the three rates, that is the rates in force, rates in the provision of the Act, and 20%, whichever is higher will be applied. And this section is a non-obstantive section. So it starts with the words notwithstanding anything in the Act, other provisions of the Act. So in this case here, this section ideally supersedes all the other sections of the Act. Uh, Now the debate here is the point of TRC, which we already discussed, that earlier they had not given any benefit to uh, non-residents who had TRC available with them. But now recently there was some amendment, and because of that, certain categories of payments, if they furnished a TRC or were not able to furnish TRC, some other document in place of that, if they could furnish that, then this section would not apply to them for those payments at all. So those payments fall out of 206AA, but other payments are still, for other payments, 206AA is very well applicable. Now here the first debate is with regards to surcharge and education cess. Whether these rates should be, modified, should be increased by the surcharge and cess prevalent. Any views, any ideas that so that
Okay, I just want to volunteer one piece of information. After the current budget, which now states that the cess as well as the surcharge are deemed to be tax, the position has
right,
become clear. Because now if it is a part of the tax, then the DTA provides for a lower tax rate. So that would obviously include the tax as per the regular as well as the surcharge and the cess. Because now it has been clarified, although for another reason, namely it's deductibility. People were trying to claim the cess as a deduction when saying that it is not tax. So there was a judgment to that effect also, to reverse the effect of that in the current budget, and which has now become law, is that cess is also a part of tax, deemed to be.
Yeah,
The
Vishnu sir,
moment it
but
is deemed to be a part of tax, then it would not apply to the DTA, because the DTA is in substitution of the tax, which now includes the cess also. And that's my view. So it becomes even more clear.
Vishnu sir, don't you think that this judgment was given in the different context, and
yes, very true. I just gave an added piece of information that in the current budget now, it has been deemed that the cess is also a tax.
Yeah, correct. But the provision related to DTA, are they going to be affected by this amendment? Because DTA is a rate which we are talking about, and there we are talking about in case the education cess is included in whatever that expenditure side, which we are talking about, which we were clearing. So they are not saying that you should add says education says to it in case there is a tax.
No. I'm not saying that the rate in the DTA, that those two things will be added. I'm only clarifying that on the one hand you have DTA and on the other hand you have the rate as per the Income Tax Act. So which is the tax? So now because of this clarification, it is even more clear that the tax is not just tax, but tax on the other side of the DTA, which is as per the Act, includes the surcharge and the cess also. So the tax plus surcharge plus cess is on one side, and on the other side there is only the DTA rate. So again, the cess and the surcharge doesn't get applied to it. That picture becomes clearer. That is what I'm trying to say post the budget amendment.
Right, sir. Sir, but ideally the department is taking the view that this section is a machinery section, as in it is just to just for the sake of compliance, and so non-compliance should not be equated with the not providing treaty benefits and all of that. So they are saying that this compliance should be made, whether or not. So what they're saying is you have to furnish a PAN. That is the compliance that you have to do. If you have not furnished a PAN, then for non-compliance, this is the rate to be followed. And they are not trying to say that it is overriding the treaty rates. So that issue still remains, right?
Yes.
So despite there being various judgments and now this amendment, this issue can still at least they can take us to the appellate level saying that okay, this addition can be made. Okay.
Are you trying to conclude right now that in spite of everything, the rates which are mentioned in the DTA are the final rates, and we should not be adding education says over and above that?
Yes, of course. So the DTA rates are definitely we should not be adding surcharge and education cess, and there are a lot of judgments which speak for that view. But even in that scenario, even if we do that, the possibility of there being this addition by the department is still there at the CIT level. Because this question has not been, even by the amendment, this question has not been resolved. They have not resolved specifically that surcharge and education cess will not apply.
Yes, true. That's a gray area. In fact, I just want to point out one more thing, that in some cases, for example, in the case of one type of royalty paid to governmental entities or something like that, I'm not able to exactly pinpoint it just now, but the rate as per DTA is higher for certain countries than as per the tax act. In that case, we choose not to go by the DTA and select the rate as per the act, because as per the act the rate is only 10% for royalties, whereas in some DTAs it is 20% for certain entities.
Sir, most of the cases, royalties and fees for technical services, that section 115, we have 10% only. But in that case, we will have to definitely add surcharge because that is as per the act.
Yes. So once you select as per the act, you take the surcharge, but still it is less than the DTA.
Correct. Absolutely.
So there we either don't claim the DTA, or there are two views again, whether to mention the clause of the DTA and then say that you are opting to pay tax as per tax act. No, because there are some practitioners who prefer not filling in the DTA provision at all, what is applicable.
So what is the ideal view? So we have done it both ways, wherein we specifically say that since it is the income tax, so then DTA is not applied. The rate is as per Income Tax Act itself.
So once we do that, whether you quote the DTA provision or not is a matter of academic interest, but and for the sake of completeness, you could give the DTA provision also.
Right. Okay. Should I move to the next one then? Okay. Now section 195A, which speaks of grossing up, this section only applies when the payer has to bear the tax element on the payments made. So whenever the payer has to bear the tax element, the rates in force apply, and then the amount is grossed up. So a payment of 100, say, will be grossed up to 110, and the relevant rate, whichever we apply, whichever is beneficial, will be applied on 110. Is ideally is summarizing this 195A. Now here again, the question is whether or not surcharge and education cess will apply, and whether 206 AA will also be have to will be seen or not. So so to summarize here, 206 AA does not apply because the section clearly states at rates in force. And in rates in force, even in the schedule to the Act, 206 AA is not been has not been mentioned separately. So it is the rate specified or the treaty rate, more beneficial of the two. Now, yeah, so in this one, I just mentioned the judgments which I felt were relevant, which provide the DTA rate, and 206 AA are not subject to surcharge and cess. Now the next topic is the recent developments. So as you all know that MLI has come into the picture, and with since 2019 this has been going on since the time India notified all the CTAs. So now it is an added task on our end where we have to check the MLI position adopted. So I mentioned the link of the OECD website where we can check so it is in a beta stage right now. So even when I check, many a times it shows errors and it does not give a proper result. But ideally, we can just check the position between, what is the status right now, currently of the two countries. So just to give a brief on MLI, MLIs are basically agreements that, for base erosion and profit shifting, the OECD nations have come together, and wherein they said that every party to this will, in order to provide so the
Your audio is actually getting sometimes off, Virti. So could you repeat what you said?
hello, yeah, okay. So the whole portion of MLI, or
The whole actually, you just said MLI and then afterwards it went up. I think you just mentioned BEPS. Just started
right,
mentioning BEPS and then immediately
right.
it went up.
Okay. So I'll just say. Just to avoid this, the base erosion and profit shifting, these countries have come together and form common clauses wherein an option is given to the country, to each country, whether or not they'll subscribe to that portion of this agreement. So it's a common standard agreement, and a country needs to choose which portion it will subscribe to with the other country, and which one it will not. So once one country has done that for all the countries, there are around 93 or 95, if I'm not wrong, which have been mentioned, which have been specified by India. India has, submitted it to the OECD. Now it is up to the other countries whether or not they'll accept these restrictions and the reservations that India has towards all the clauses mentioned. And if they don't, then their position stands good. So it is like an agreement between two countries, but happening on a common forum. So it becomes very difficult for us. So in case of a DTAA, it was easy, wherein all the databases available to both the countries, and you can just read and go through it. What are the provisions, and it remains common for both. Whereas in this case, right now it is possible that India has said that okay, we will, for example, for transparent entities, we will hold our reservation. We will not subscribe to this, and so the other country does not have a say then. But in cases where India remains silent, it remains open to interpretation, and we need to then check the other country's submission to ACD, and then suitably the DTA will get amended. Now we have synthesized texts available on the income tax website, and they are available for 28 countries right now. But I really couldn't gather any information as to how many have actually materialized and become CTAs. CTA is a cover tax agreement when both the countries have notified, and both the countries have accepted and have made submissions to ACD. It becomes a CTA, cover tax agreement. So I'm not sure if more than 28 countries have already been notified or not. Any information, any views that anybody else has on this? Am I audible? Hello?
Yeah, but nobody's having any
Okay,
information.
okay.
Looks like.
Okay. Okay, yeah. I think it is a very because the problem with this is it becomes effective for every country. It becomes effective from the date there's some criteria of 3 months from when they've made a submission. So we also need to keep a track when that company has submitted to OECD, and after 3 months after that it becomes applicable to India as well. So I know of 28 that are available because they're available on the portal on our website. Otherwise, I couldn't find any way to keep track
No,
of this.
currently it's difficult to hazard a guess, so I guess no one will commit to that. Also, another reason is because of the current ongoing situation across Europe. Therefore, probably updation of these is on the back burner. There's a lot of other political activities going on. It will happen, but eventually, maybe they'll not seriously follow it up for this 1 year. We don't know how the department is going to take it. Because I have seen often there are provisions which come into place, but there is no teeth in that provision till the department starts seriously looking into it, that way. For example, even when penalties were introduced under service tax or under GST, initially they were not very trigger happy. First, they say let the legislation be accepted when there is a new legislation, and then they go after that. Same way, probably this will stabilize in a year or so.
Right. But whenever they do, wake up, or whenever they do start implementing it, it will be with effect from the date of the implementation of the MLI. And at
No,
that
that is
time,
true.
probably it will, yes.
Virti, so far as
Okay.
our timing is concerned, we are almost over for today's time. So
Right.
you think you have one more full session material with you, or you can complete within next, let's say, 5 or 10 minutes?
So ideally, we haven't even started with the practical cases
Correct.
issues. So yeah, so I think more than half of what is we've only come to I think 1/4 of the study material that I gathered.
So because the time of every participant is
Correct.
relevant is also important, and as
Right,
you have
right.
said that let there be one part 1, part 2, part 3 doesn't make any difference, but the discussion should be completed. Although we may not come to conclusion, but at least we should know what are the gray areas or problem areas. Okay.
Right.
Sanjay Nikam is also there in this group, and he's also listening. If you are listening, Sanjay, is it possible for you to give some kind of a thanksgiving to the speakers for the day, if at all you are listening?
Yes, sir. It will be my honor and privilege for me, sir. And first of all, many congratulations to all of you, because we have got such a team leader here in form of जसं स्टार्टिंगला संदीप पण सांगितलं, Jaivan sir is there, who is holding all the team here and inviting good speakers to talk on various topics. So let me congratulate him also, and big round of applause to his dedication for this group. Apart from him, today's speakers, like we had in initial stage, we had our Deepesh sir. And sir, let me tell you everyone, because these young people, they are contributing in different way to our profession, because nowadays everything is digitalized and everything is on the system only. And with such kind of innovative youth who are chartered accountant, they understand the needs and requirements of our profession, and they are coming up with such nice tools which will be helpful to everyone. I congratulate Deepesh for such a good idea, which will be helpful to profession at large. One next speaker, Virti, very nice analysis about the situation, cases, provisions, rules, and she was supported with a good presentation. Though time was very limited because topic is very vast, still she tried to justify the topic. To support her, our senior members also were pitching their own knowledge, experience, and that way it was very much interactive session. Let me tell you, this was a dinner time. Still, so many people were glued to this session. This is the achievement of our today's session. So thank you very much to all delegates also, organizers also, and speakers also for giving good feast of knowledge. Thank you so much.
Thank you.
Thank you for your kind words, sir. Thank you.
Thank you so much, sir.
Be meeting again for completing this. Okay.
Sagar sir, एक फक्त suggestion. You discuss it with Virti ma'am. Even I can give input. You know, many people, I don't know, we'll have to find out. Especially आता poem, BEPS वगैरे ह्या ज्या गोष्टी आहेत ना, मागे पण आपण एकदा बोललो होतो, ते कधीतरी कव्हर करायचं का. तर if we are planning to take it into 3-4 sessions, maybe before or in the beginning of that session, these terms could be explained. Karan, it's important to understand them, especially poem and all, list of effective management, what are the criteria?
This was actually discussed at least in brief by Deepak sir, na? Deepak Tikekar.
केलं होतं का cover?
Oh, POM he had covered. Maybe he had rested a little, but yes, but he had covered. We'll
then no problem.
Yeah, we can actually once again share the YouTube link for this. All this recording will be uploaded to YouTube. Once you subscribe to that, what will happen is that you will also be able to see the previous videos.
Right.
So there, Deepak Tikekar sir has also already done that particular topic.
Right. Okay. So then people will be that knowledge will be refreshed, so it will be easier to understand the provisions.
Correct. Okay. So thanks a lot. Can we close the meeting for the day?
Yes, sir.
Sure, sir.
Sure, sir.
Thank you.